And it's a new week. Good morning, good evening, wherever in the world you're watching from. It's Business Morning live on Channels Television. I'm Ladi Williams. Great to have you join us on the first episode for this week. Let's drill down now with oil prices. See, they fell today, ending 3 days of gains on fears aggressive U.S. interest rate hikes may lead to a global economic slowdown and dent fuel demand. Brent crude futures for October settlement declined $1.17 to $95.55 a barrel. In early trade, with concerns over slowing demand in China because of a power crunch in some areas, also weighing on prices. U.S. West Texas Intermediate crude futures for September delivery due to expire on Monday was down $1.12 to $89.65 a barrel. The more active October contract was at $89.29, down about $1.15. Both Brent and WTI climbed for a third straight day on Friday, but fell about 1.5% for the week on a stronger dollar and demand fears. And now to our first conversations. Well, talks about repatriation of funds still rocking the aviation industry, with Emirates Airlines planning to suspend all flights to Nigeria by September 1st due to $85 million of its revenue trapped in Nigeria. How would this impact foreign investment into the country? Let's talk to Gbemisola Alonge now, Senior Development Analyst with Stairs. Join us via Zoom. Great to have you. Good morning.
Hi, Ladi. Thanks for having me.
Yeah, so Gbemi, it's been talks about this funds blocked. Some say the funds are not blocked. Some say that they have access to the funds. Gbemi, how are you seeing all of this?
They might have access to their own funds in Naira, but having to take the money out of the country has currently been difficult for airlines. And it's not just Emirates, like the total aviation industry, international airlines that operate in Nigeria currently can take out about $464 million out of Nigeria. And that's because of repatriation issues. But then, Nigeria is not the only country. So there are reports of about 20 countries basically being unable to help airlines take out their money across the world. So Nigeria is not the only country that's currently going through it. But I don't think it's accurate to say that these airlines can take out their money or they have access to their money, because they don't.
Quite interesting. And how do you think what does this mean for investors? Because, this is a time where we're looking for FDI into the country, and this is happening.
Yeah. So usually, like the way the airline industry and many other investors or investments would work is you bring in your money in your foreign currency, you exchange it for Naira through the banks or through the CBN or whichever financial operator you want to use. And then you get Naira, use Naira to run your business. In some cases, like in the airlines, you receive your earnings or your revenue in Naira. And then when it's time, after you've operated for a bit or after some time, you can take out your money net of taxes or working capital and all that out of the country. And then this is basically how they work. But then in a situation where you have you've done some business for some time, like in the airline situation, and you can't take your money out, for investors like Emirates, like their own response to that is to pause operations. Even before they pause, like most airlines have like a they have a policy where once you cannot access a certain amount of money, they already reduce the number of flights that they take in and out of the country. So that's what happens. First impact would be reduced operations in the country. What does that mean for Nigerians? That means less employment. That means just less business for Nigerians that need to fly. That means less flights and more expensive tickets. So basically, the impact of this is, even for investors, is a bad outlook, right? So it's one thing to tell the airlines that you can't take your money out, or it's another thing to tell them that you can take it out after a certain period. Right now, they don't even know when or if they can take their money out. And what's worse is, by the time they're collected, their revenue is currently in Naira. if they decide to take it after some time and the naira has already been devalued after that, then they take less money than they were supposed to when they actually made the money. So it just shows it's a bit inconsistent. Businesses need to use this money. The airline industry has gone through a lot of issues from COVID, reduced flights and things like that. So they actually need this money now more than ever. And then not being able to take it prevents it just causes poor planning, causes different issues that they currently cannot accommodate because the airline has been through a lot of issues. So it's not a good look for Nigeria, especially from the investors' angle.
Yeah, quite interesting. And what about domestic airlines? How is this going to impact them? Because does it mean more business for them?
So for domestic airlines, they might actually be going through almost the same thing. Although they make money in Nigeria and they're domestic, some of them fly abroad, and they all need parts abroad. They need to pay for the aircrafts that they bought or they buy abroad. They need to pay. I mean, they've taken loans in foreign currency. They need to pay those loans as well. They need to buy jet fuel in dollars as well. So these issues are not only faced by the international airlines, but also by local airlines. So even though they're only flying within Nigeria, the fact that they need to sort of use foreign currency to access some things that they would need to operate their businesses as usual is also going to affect them. So even if international airlines say they don't want to fly anymore, those domestic airlines that fly or domestic carriers that fly internationally would still need to pay for these things that the international airlines, some of the things that the international airlines would need to pay for in dollars. So that's an issue.
Right, everyone's feeling the FX issue at this point. But Gbemi, tell me, what's the way out of this?
So, like I said earlier, the issue really is the genesis of all this is banks don't have enough dollars. And when airlines need money, they don't go to CBN, they go to the banks. You go to your GT Bank or UBA or whatever, and you ask them for money. You show them proof of your revenue for the month or for the period, and then the banks go to the CBN during the FX auction, and they expect to get some money. Now, what has been happening for the past few years is, as at 2019, the CBN was buying way more dollars from the banks than the banks were buying from the CBN. So during the auction, banks would meet with the CBN and they would, I think in 2019, the CBN bought about $8 billion throughout the year from banks. Meanwhile, banks only bought like $5 billion from the CBN. So that means that there was enough FX liquidity for banks to sort of service their clients. But right now, because FDI and FPI, like foreign investments into the country, has declined, they don't have that much money. As of 2019, when they were able to sell $8 billion to CBN, inflow of foreign investments into Nigeria was up to 23 billion. Last year, this dropped to like 7 billion. This year, this Q1 of this year, we only did like $1.5 billion. So banks don't have that much liquidity and they're now having to rely more on the CBN. And I get it, like the CBN also feels like it needs to protect the reserves and cannot give out that much, cannot give out as much FX as it would usually do. But then now is not the time to curb. Like, first thing that CBN will need to do is rise up to the occasion. Like, you can't ask banks to go and get dollars because normally, like, the banks are not the ones that will bring in the foreign investments. All they can do is convince the investors that they can help them safeguard their funds and things like that. They're not in the business of marketing Nigeria as an investment destination. So you can't, like, there's only so much the banks can do. So the CBN can step in now, provide some foreign exchange liquidity, continue to plug in the banking sector with FX. Another thing that the CBN can do is communicate. Like, yes, you want investors to take out their money in an orderly fashion, but let the investors know, let the banks know how much the CBN, because sometimes, like, the banks don't even know how much FX would be available until they actually go for the FX auctions. So let them know how much would be available. Let them communicate same to their clients. Let them tell their clients how much would be, so that these companies can plan. Because the main issue here for investors is just the inability for them to plan for their future. If I don't know when I can take my money out, I don't know if I'll be able to meet my debt obligation for that month. If I expect $10 million today and I don't get it, or if I expect $10 million this month because of revenue or because of my sales for the month and I don't get it, I need to be able to plan ahead. Like if I know I'm not going to get it, I need to know that, okay, my debt servicing or working capital wouldn't be coming from this source, right? But then in Nigeria's case, like these investors do not even know if they'll get their money, when they'll get their money, how they'll get their money. They just go through the normal channels, and then at the end of the month, the bank says, oh, they don't have enough FX and they need to ration what's available to them. So that's really impacting them. What the CBN can do is properly communicate. Like, this is how much FX we're going to be giving out. So if you have any plans to use dollars, make alternative arrangements. So I think that's another thing that the CBN can do right now. I mean, ultimately, we still need to find a way to bring in foreign exchange into the country. And that would go, that's almost beyond the purview of the CBN. The CBN can do a good job by ensuring that the financial sector is safe enough for investors to come and they feel like they can rely on it. But then what's more is that they need to ensure that investors, the country needs to be a good investment destination for investors.
All right, Gbemi. Well, so much to unpack there. I hope these matters are solved as soon as possible. Thank you so much, Gbemi Sola-Longe, Senior Development Analyst with STAIRS. Thank you.
Thanks for having me.
All right, now, so after the break, we head on to more conversations, this time about interventions to promote ease of doing business in Nigeria. That's the moment. Do stay with us. Welcome back now to our next conversation. Well, it's about ease of doing business in Nigeria. That's what's been dominating our conversation so far. And now recently, the Ease of Doing Business Bill, also known as the Omnibus Bill, was passed its second reading at the Nigerian Senate earlier this year. Let's discuss this and other matters now with Dr. Jumoke Oduwole, Special Advisor to the President on Ease of Doing Business and Secretary to PEBEC. Great to have you on the show. Good morning. Great to have you join us this morning.
Good morning. It's good to be here.
Yeah, great to have you. So tell us about this Ease of Doing Business Bill, a.k.a. the Omnibus Bill.
So the Omnibus Bill is a collaborative effort with the public and private sector. It's been on since 2018. We've been working with private sector stakeholders, NESG, the Section of Business Law of the Nigerian Bar Association. We worked with the National Assembly, Business Roundtable, and on the public sector side, the Ministry of Justice, a lot of other ministries, departments, and agencies. The aim is to scoop up all the redundant and irrelevant, and also the provisions in certain bills that are a bit of bottlenecks, as defined by private sector or by a ministry, department, and agency itself. So it's a bill that aggregates a number of different provisions across about 13 pieces of legislation and proposes reforms. So that's why it's called an omnibus bill. It's a tool that is used in different parts of the world: Canada, Australia, New Zealand. Kenya also has one for their MSMEs, Mauritius. So this is the first time Nigeria is having an omnibus bill for its business environment. However, the finance bill can be considered an omnibus bill in a sense, because that bill has also been aggregating over the last 3 years. The finance acts have also been aggregating legislation amendments in the tax regime area.
Quite interesting. And, Nigeria recently ranked about 131 among 190 economies for ease of doing business. That was the last ranking we got. And I'm wondering, what is being done to get us up higher, on that ranking?
Well, not so recently, actually. That was 2019, and that report has been discontinued by the World Bank.
Yes, exactly.
You may recall, yes.
Yeah.
So that's that. The World Bank has stopped doing that ranking. But thankfully, Nigeria was already ahead of the curve. We had our own plans to go deeper ourselves, because the World Bank tool was fine. We used it to track the business cycle from inception, from starting a business all the way to insolvency. And we made good traction. You recall that twice in the last 3 years of that report, Nigeria was adjudged to be a top 10 global reformer, most improved business climate. And we moved 39 places in our rankings year on year aggregate. But be that as it may, what we prefer to focus on is the impact, the tangible impact that MSMEs give us as feedback all across the country. So since 2017, we've been partnering with the National Economic Council, the NEC, which is a council made up of governors and some federal ministers, like the Minister of Finance, and it's chaired by His Excellency, the Vice President. And the governors agreed unanimously to replicate the PEBEC model of iteration from ideation, engagement with private sector, and identifying certain reforms and actually carrying them out. So we've been doing that since 2017. You may recall our lituation tour, going around the country, talking with MSMEs. We have 6 priority sectors. We like to focus tangibly on younger entrepreneurs, which is not necessarily about age, but it's about the demographic and the faster moving parts of the economy, like the tech sector, creative sector, agribusiness, decentralized power, transport and logistics. So we do and of course, light manufacturing. So we do quite a bit in those areas. Now, partnering with NEC has meant that we've been able to cascade ease of doing business across the country, because you know that no business is domiciled at the federal level. Even if it's in the FCT, it's working within a subnational business environment. So that collaboration has been extremely important. We went ahead to release our inaugural and baseline ease of doing business report on Nigeria in 2021. And the recommendations from that report, based on was carried out by KPMG, based on feedback from the private sector, ensured that states were able to target specific interventions. Now, we've gone further than that. The second iteration of that report will be coming out at the beginning of October. But in addition to that, we've been partnering with the World Bank since 2019. We've been talking about a program to help deepen subnational reforms. Now, that program has recently been approved by the PEBEC, the NEC, the World Bank. In fact, all roads lead to implementation come January 2023.
That's about $750 million intervention.
Yes.
And I'm wondering,
yes.
what can we expect, from that intervention?
Okay, yeah. That's just my most exciting thing right now. So I know that I'm preempting your questions, which is good. So the SABRE is state actions on the business environment, having worked with state governments for a while and consolidating that idea of having uniform reforms that we're all working on at the subnational level. The PEBEC team, the PEBEC Secretariat team, has worked with the World Bank team to develop a program that has about 4 areas. We'll be looking at about 8 disbursement-linked indicators. So to go back a bit and give you some background, the program is going to be a $750 million program for results over the next 3 years, from 2023 to 2025. And what that means is that after states have delivered results, they will get a reimbursement. So the disbursement-linked indicators span 4 areas. Now, the SABRE intervention itself, the government SABRE envelope, is about $2 billion. And that comes from the aggregation of state expenditure budgets over the next 3 years as captured under the National Development Plan. So at the federal level and at the subnational level, an aggregation of all the interventions and the areas that we hope to work on over the next 3 years and deliver results on is $2 billion. So the SABRE program at $750 million comes in at about 36% of that.
Right.
The 4 areas, the first area would cover about land registration. So the disbursement-linked indicator under that is a single one, has to do with transparency of the process and the structure of getting COOs at the state levels. And the second area has to do with just making sure that we can digitize the economy. So right of way, fiber optic laying, how states can incentivize businesses that will be laying fiber optic cables in the environment just to jumpstart the digital economy, which is of critical importance, as we all know.
And Doctor, Doctor, sorry to cut you, Doctor, but some would say, he's doing business in Nigeria. We have issues from security, power to regulations, stifling innovation. And I'm wondering, if these issues are not solved, are we going to get the benefits of this intervention?
Well, that's exactly what it is. There's no shortcut. So as I was saying, the third area deals with public-private partnership frameworks. You have to develop a PPP framework across states. This is the only way to crowd in larger investments and to make sure that those can be delivered at the states. Our MSMEs, as we know, contribute just under 50% of the GDP, but by far most of them are micro and even nano. How do we support them to scale? These are the reforms that need to be done in this area. And then investment promotion also needs to be supported. So having a coordinated and consolidated effort across the country on making sure that investment promotion. Then the fourth bucket is the regulatory, the legal framework, small claims courts, having expedited access to justice, transparency, having the procedures and the costs properly spelled out online so that everybody can know what's expected of them in every state across the country, having a tax regime at the subnational, including local government level, simplified, and making sure that our businesses are able to be more competitive, both domestically and for export. Now, these are the areas, these are the reforms. So these things are not in abstract. They're very detailed reforms. If you follow the work of the PEBEC, we didn't just get recognized by the World Bank based on feedback from private sector in Nigeria because of optics or because of fancy presentations. There's no doubt that we have a lot of challenges in the country right now, but we have to just continue focusing and doing the work. And I'm so happy and proud that the governors are committed to this intervention. It's a tangible intervention. It's not even, so the recommendations from the second iteration of the annual ease of doing business report for Nigeria by Nigerians will be released at the beginning of October. That will also form part of the state action plans. What I should say is that the states have to create, to be eligible to get to access to these funds, the states have to prepare a state action plan in collaboration with private sector in the states, and that has to be approved by the EXCO and published online. So these are not things that are going to be vague in any way. The program also leverages on SIFTAS, which is another World Bank program that is running to a close after about 3 years, that has remarkably improved the fiscal responsibility and debt sustainability profiles at the subnational level.
Okay.
So it's a whole package for the country, and it's tangible, it's empirically measurable, and we know that it will deliver because it's been a proven way of delivering results.
Right. Well, we'll keep tracking, the intervention and all that you're doing there. Thank you so much, Dr. Jumoke Oduwole, Special Advisor to the President on Ease of Doing Business and Secretary to PEBEC. Thank you so much for coming.
You're welcome.
All right, now, so after the break, we'll drill down on conversations from the Nigerian Capital Market Community meeting. We'll drill down on that. That's next in a moment. Do stay with us. This is Business Morning. Welcome back now to our next conversation. The Nigeria Capital Market Community held its second Capital Market Committee meeting for the year. That was last week. Let's get a sense of what was discussed now with Mr. Oke Umano, Head Office of the Chief Economist, Securities and Exchange Commission. Great to have you on the program this morning.
Good morning, Ladi. It's good to be here again.
Yeah, great to have you. It's our second meeting this year, I believe. Quite an interesting conversations, had at the last minute meeting, and top on the agenda was about unclaimed dividends. The volume rose, compared to last year. And I'm wondering, why is it still rising?
The unclaimed dividend issue has become a bit naughty. We've done a lot to see that it reduces. The rise you're seeing stems from the fact that we still have a lot of shares, company shares that have not been claimed by the owners. You remember in 2008 thereabout, we had a lot of investors who, bought shares without using the right, identification. We have opened a window for about 2 years now, asking them to come in, identify those shares and take them over and, begin to trade them and all that. But a lot of them haven't come forward. So what we've been doing now is to, educate the public, like I'm doing now. Tell people that if you have these shares, if you have these, stocks bought in names that weren't yours at the time, you can come in now, prove ownership and get them. What happens is, as long as we do not resolve this identity issue, the unclaimed dividend quantum will remain high. Because as dividends are paid to these shares that haven't been claimed, the unclaimed dividends will continue to mount. But what we have done is to ensure that new ones do not add. When new investors come into the market now, they are well, onboarded, such that the identification issue is no longer a problem.
Right, and I also, heard conversations about, some stakeholders actually encouraging, these unclaimed dividends, that they will actually be punished. And I'm wondering, how are they contributing to that?
Okay. The DG gave a warning around any stakeholder, any at all, who frustrates the payment process. We have an e-dividend payment process where if one mandates his or her account, an investor mandates his or her account, dividends are paid directly to the person's bank accounts. The process is very clear, and the SEC was just issuing warning to all the stakeholders along that line, along the process, to ensure that the process is efficient. It's fluid. There are no bottlenecks. So that was what the warning was about. Sometimes we get one complaint or so, or a few complaints here and there about people not doing their parts in the process, and that's what that warning was for. The SEC is committed to ensuring that investors get their dividends. We are not happy to have that quantum of unclaimed dividends, being recorded. So that's why we are making all the efforts we can.
And there's also been complaints about delay, in getting these payments. What's causing that?
So that's what we are talking about, the bottlenecks. Certain stakeholders have been slow in carrying out their own parts, of the process of getting accounts mandated to receive dividends electronically. And that's the warning we are giving. These things are clear. The process has been made very, it's supposed to be seamless. An investor identifies the companies where he or she has shares, goes to the registrar of those companies and gets a form filled, gets something to prove that the accounts he has given are his, and that's it. And the registrar, kicks off the process of getting those dividends paid. It's actually a seamless process, an easy process, and I call on Nigerians who own shares, wherever they may be, to try and get to know what registrars are in charge of those companies that they own, and get their accounts mandated so they get their monies.
Quite interesting. And there's also that issue of illegal crowdfunding platforms that was also talked about. What's the plan to shut that down?
Okay, Ladi, we set up this crowdfunding, the crowdfunding rules to encourage MSMEs. The small and medium scale enterprises find it difficult to raise funds. That's one of the impediments they have. The traditional exchanges require large amounts of capital, and the requirements are some or way above what the SMEs can do. So we brought out the crowdfunding rules. But these rules require that crowdfunding platforms register with the commission. Now, this is very important because one of the commission's mandates is investor protection. If we do not know what monies are raised and how they are raised and what they are raised for, then we will not be able to protect the investors. And that's why we brought the rules and said every crowdfunding platform should register with the SEC, so that the SEC will have oversight over what is done, so that investors can be protected. But what we've noticed is that a few rogue ones have continued to raise money without registration with the SEC. And that's what the SEC is saying. We are going to come after those crowdfunding platforms who are not registered and close them. And we're also warning investors, when you want to join any fundraise on a crowdfunding platform, find out if the SEC has registered that platform, because it's for your own good. That registration ensures that the SEC oversees what that crowdfunding platform is doing and ensures that you are protected as an investor.
Quite interesting. And also, I heard talk about the status of the amendment to the investment of the Securities Act for 2007. How's that looking?
It's looking good. We're working with the National Assembly. It's passed, the ISB has passed second reading at the House of Representatives. We hope that when they return from recess, the process will continue. The ISB is important to us. We are still operating on the Investment and Securities Act of 2007. That is a bit dated. There are certain things that have changed in the market. It's a dynamic capital market. A lot of things have changed. So we require certain rules, certain laws, that will help us in our work in building a vibrant capital market that will support the economic growth of Nigeria. So the new Investment and Securities Bill, which we hope will soon become an act, is to support these things. For instance, we have things to support the commodities ecosystem we are building, to support derivatives trading, to support digital assets. So all these are dependent on that. And we will continue to work with the National Assembly on this. We're also working with NESG on this too. And we invite other stakeholders to join, because we believe that the capital market is the veritable source of financing for a lot of problems that we have as a nation. Infrastructure, for instance. It's obvious that the government really cannot finance the infrastructure gap we have from the budget. So the capital market is the only source that can, bridge that gap. And if we put everything in place, then we will be the better for it.
Right. All right. Thank you so much, Mr. Okeomano, Head, Office of Chief Economist, Securities and Exchange Commission. It was great having you on the program.
Thank you, Ladi.
All right, now let's head on to the market. Well, it was quite a negative close last week. We have Anyete now to come tell us what to expect for the week. Anyete, you can come on in now. Let's drill down on this market. How's it looking, Anyete?
Good morning, Ladi.
Morning. It's good to, yes, I've not had you on this side of the show for a while now.
Exactly.
Great to have you back.
Of course, I've been at the back end of the program,
right?
The back end of the production. But it's good to be back on air. But like you rightly said, the markets, in particular, the equities market, so far the month of August is deeply in the red.
Quite a tough month.
Yeah. All the gains have been erased.
Yeah.
No doubt that's because investors have been taking so much profits for several reasons. So we're going to talk to our guest. So our guest will be telling us more about that equities market. But first, let's start with the forex market. Starting with that market, it was kind of a mixed bag there. There you see at the FX spot market, it was up by 8.49%. The same for the forwards market, it was up by 119.62%, while the futures and derivatives, as well as the FX derivatives, they were down by 82.26 and 75.6. So, but when you take a look at the total value of the transactions carried out there, it was down by 36.58%. Looking at the Naira was down by 0.27%. So that's for the FX market. And at the same time, just last week, we had the Nigeria's forex reserves increasing by, it staged a mild rebound, the very first in 4 weeks. And it was up by $22 million, but still within that $38 billion in value. Now, let's move over to the bonds market, the fixed income market to be precise, but we'll start with the bonds market. The bonds market, it was bearish. Now take a look. The concentration was mostly on the 22nd of January 2026 paper. It had 2 deals, and the 28th of December 2025 paper, it had just 1 deal. Total number of deals carried out on that segment was 3, and the total value was 250 million naira. It's been kind of, very tepid there, most especially when you take a look at, when you take into cognizance that last week the inflation figures came out, which show that the country's inflation is still climbing 19.64%. So whether that's going to be better for investors or not too good for investors, we'll be having fixed income analysts to talk to us more about that. So now let's flip over to the Treasury bills market. Now for the Treasury bills market, it was still bearish. It's also bearish. That's because it's attributed to a depressed system liquidity, and that caused participants to sell off the bills across the curve. And the average yield there increased by 5 basis points to 11.2%. But take a look at the board there. The only concentration was on the 25th of August paper, 2022, which is within this week. And then the number of deals carried out there was just 2. Now, let's flip over to the open markets operations paper. It was also, well, it had a bit of activity, but the total number of deals carried out across 3 segments there was just 8, and the total value there was 22.51 billion naira. And that's it for that market. So let's talk to Bosun Obembe, who's a fixed income trader at Access Bank, so to give us more insight into that market. Thank you for joining us, Bosun.
Thank you for having me, Victor. Good morning.
Okay, so your fixed income markets, it's not much of activity going on there, and we had the FGM bond auction for August, as well as the investors reacting to the latest inflation figure, and then of course I know there will be a primary market auction to be carried out by the central bank this week. So can you tell us what to expect, especially as the 4th week of August begins?
Well, thank you. So just like you mentioned, the bearish trend dominated last week. Though we had a bond auction, coincidentally, that was the day the inflation figure came out, where it rose from 18.6 to 19.64. So at the bond auction, we saw the impact of the inflation reflecting in the stop rate. The short end, the 2025 bond increased by 150 basis points, and on the long end too, the market closed at the stop rate closed at 14% handle, and the market has been trading at this level. Even the impact of the inflation, we may see it in the fixed income space. On Thursday, there was a normal auction. We've not seen that in like 4 weeks. There was a normal auction, but there was no interest from most of the participants. We see the investors looking to buy at a range above the level at which CBN will most likely sell. So we've been seeing the impact of the inflation, and the illiquidity in the system too has persisted. On Friday, there was a retail auction where, because as you know, on the FX, CBN has been a major player in the FX space. So on Friday, there was a retail auction as a result of that. There is illiquidity in terms of money market. But this week, I think we have a normal maturity tomorrow, and there will be a coupon payment tomorrow as well, about 60 billion on 2028 paper. So I think market will be quite bearish till Thursday. And Wednesday, there will be an NTB auction. At the last auction, the stop rate on the 364 DB closed at 7.45. But due to the increase in inflation, I expected that at this auction, even though we have about 295 billion maturing, so DMO will float another auction to actually take out this money. However, it will be at an additional cost to DMO because the investor actually resisting the single digit rate. So even though we still close at single digit, but I expect at the longer the rate will actually increase significantly, at least to match the impact of the increase in inflation.
Okay, so Ladi, thank you for that analysis, Bosun Obembe, and we will be looking at the fixed income market as the week proceeds. So Ladi,
Still quite a boring market.
I won't call it boring. I won't call it boring
to me
because what's good for the goose may not be good for the gander.
Right.
You know, the market always has two sides of the coin.
Exactly.
What's good for some one part may not be that good for the other part. So
but after the break, we'll drill down to see, how the equities market performed and what to expect. That's the moment to stay with us. This is Business Morning. Welcome back. Still watching Business Morning. We're still drilling down on those markets, and we still have Aniete right here, and he's going to give us the details for the equities market next.
Yeah, we were talking about that equities market, like you rightly mentioned.
Bloody August for that market.
Yes. Just call it a red market, a sea of red, but not really a sea of red when you look at the sectoral performance. So, all right, so let's let's take a look at the board. Now, this is what you see at the close of last week's trading session at the NGX, which is the third week of August. It was down by 1.07%, and that's more than, if I would estimate, about 400 billion knocked off from the market. Now, month to date, the market's loss has increased to about minus 20%, while year-to-date gain has also been reduced to about 15.6%. 15.6%. Now, let's take a look at the activity chart there. The banking sector, it was down by 0.65%, but the highest decline that you saw there was on the insurance counter. Of course, that's counter has always been in the red. And then, of course, the highest impact of that loss was particularly on the consumer goods sector, even though, we had, as a Friday's trading session, we had MTN Nigeria making some gain, but that gain did not reflect on the market because, the impact of the losses was far greater than the gain recorded by MTN at the close of Friday's trading session. But in terms of week-to-date performance, this is how it turned out. It was just industrial goods sector. And then, of course, let's take a look at the volume of transaction. The volume of transaction for last week, it was down by 45.5%, while week on week, the value was down by more than almost 10%. So, but to give us more insight into what to expect into the opening of today's trading session, let's talk to Richard Akimoladu, who is an equity trader at CSL Stockbrokers. Thank you for joining us, Richard.
Thank you for having me on your program this morning, Anita.
Yeah, I'm sure more than, if I would estimate, like I said earlier, more than 400 billion naira is lost from the market this week. And so far, the month of August has been depressed. But year to date, the market is still in positive terrain. Would you say that we are in a bear market? And at the same time, what should we expect as we enter the fourth trading week of August?
Okay, thank you for your question. Though we've seen like 2 weeks of consecutive losses in the market, we've seen sell-off across all sectors in the market year to date. Now we are at 15.58%. That if you look at the market, that before now the market used to stand on two legs. We have the FPI and the local investors. But what we are having now, we are having the market tilting majorly towards the local traders, local investors, and there's little to what they can take from the market when the FPIs are selling. So that's why we have seen the markets being on this bearish mode that we have been seeing. And if you look at the other market too, you know that our investors try to look at where they can get the better gain. So if you look at the fixed income, we've seen that there have been an improvement in yield in the last T-bill auction and even in the last bond auction. So we see funds trying to find their way into the fixed income space. So that's what we're seeing in the market. And the last H1 result that was released into the market that we thought is going to actually spur some positive sentiment in the market, we refuse to see that because investors they've entered into this market at a very elevated level, and they are being cautious now, looking at where prices are.
Okay, thank you for that analysis, Richard. And of course, well, I'm not an investor, but I think I'll take the side of caution if I were to be an investor. But let's see how the market closes at today. So Ladi.
Well, at some point, I know you're going to become an investor in this market. It's your best market. At some point.
I'm taking my time. I wouldn't tell you my investment strategy, but
yeah,
like I told you before, I told you before, I said, what's good for one person may not be good for the other. So some people may cherish a bullish market because they're already in the market, while some people may cherish a bear market because the prices are, kind of lower, so they will want to enter when it's maybe rock bottom.
All right. Well, you know me, I like to buy the bottom. Thank you so much, Anita.
Exactly.
All right, now, so we'll head on to other markets. Well, the crypto market still not looking good at this point. We're seeing fear. It's deeper into fear, talking about the crypto market. Let's head on now and see what's happening there. We see 29 points of 100, still fear. And it looks like it might be tending towards extreme fear at some point. We know we're at extreme fear earlier this year for the longest time. Been able to break out of that, but now we're 29 points fear. Let's look at the market cap now. Let's see what's happening there. We see $1.02 trillion. Looks like it might be tending lower than 1 trillion at this point. It's down, but it's up by 1.21% this morning, but it's down a huge chunk from the last place we were was by 1.12 trillion the last time. Volume traded down 28.51%. Bitcoin dominance there sitting at 40.19%. Let's see the price of Bitcoin this morning, $21,338. That's down 0.42%. We're seeing quite a seesaw movement with Bitcoin, price of Bitcoin. It's been struggling since it touched 25,000. Volume traded $23.28 billion. Let's try and bring in Rume Ofi now, digital market analyst, to tell us what's going on. Hello, Rume. Good morning.
Good morning, Larry. Good morning.
Yeah, Rume, it's not that exciting talking about if you're a trader in that market. And it seems like the bulls are losing steam in this market.
Exactly. No one wants to invest in a market that is uncertain. The market actually now is uncertain, and all eyes on figures that will be coming out this week. And hopefully we could get the direction up or down, probably.
And talking about direction and, data, we're expecting for the week. What direction are you expecting? Downward? I know most investors are expecting downward at this time.
Yeah, for a fact, Larry, I must tell you the truth. This week, we're going to be seeing a lot of data coming out. How the market is going to react to it, it's already showing some sign. For example, the dollar index, that the DXY is about 108.3, which means that there's a stronger dollar, which is also not good for risky assets like Bitcoin and others. And also this week at the Jackson Hole in Wyoming, there will be a global central bank conference that will be taking place August 25th to 27th. The Chairman Powell is expected to speak with regard to the importance of what is going to happen with rate hikes. We're going to see if possibly there's going to remain 75 basis points for September, or probably a lesser hawkish Fed. That's more like a 50 basis point, right? So, but again, let's not forget that this week is also a week where the U.S. Bureau of Labor Statistics is going to come out as well. That's on Friday. Is going to also show the personal consumption expenditure, that is the PCE price index, and that is going to determine the market a whole lot deal.
Yeah, well, it seems it's the U.S. moving most of these markets, especially the crypto market at this time. But thank you so much, Rume. We'll see how the week plays out.
Thank you very much, Ladi. Always a pleasure.
All right. So let's look at what's happening with Ethereum there. We see $1,500. We know this actually broke $2,000 when the market was looking quite bullish, but now we're seeing it at $1,500 wiped out, down 1.03% this morning. Volume traded $15.59 billion. And we see our top alts by market cap next. We see it's all red on that counter. BNB there lost the $300 mark, down 0.85. So the market is not looking so good, but that's it for the crypto market, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and developments in the world of business. And remember, you can always watch this again on our YouTube page. Search for Channels Television on YouTube, search for our videos. You can watch this and other videos. Thank you so much for watching. I'm Ladi Williams. Bye for now.